Coming up, Trump says 80% tariffs on China seem right, and that it's up to Scott Bessent. And this weekend, Trump officials are set to meet with Chinese negotiators in Geneva, and we are largely not expecting a trade deal at this time. However, the idea that there is some sort of talks happening is a positive sign in the right direction. And in other news, Fed's Williams says, I expect growth to slow considerably and inflation and unemployment to be higher. And this echoes of what we heard from Jerome Powell on Wednesday, some concerns without saying the word that I'll say out loud, which is stagflation fears. And of course, as a reminder, stagflation is the concept that you have slowing growth, specifically highlighted by jobs, as well as rising prices, as indicated by inflation. And this is not a fun environment because the Fed doesn't really have a great option in this case. Taking a look at the S&P 500, this week has actually mostly been pretty choppy, with not really a huge decisive push in one way or the other. In fact, the VIX has decisively gone from kind of spiraling higher to actually trending lower. And if you're not familiar with what the VIX is, it's basically a volatility index on the S&P 500 and forecasts future market expected volatility. So if we're looking at this and this is low, that's expecting that the market is expecting less of a move going forward. And when it's high, it's expecting huge moves to occur. The VIX is currently trading around 22.5, which is neither high nor low. In fact, it's pretty standard in terms of a long-term average. And the blue line that I've just applied to the chart is a 200-day moving average. And what you can see is volatility is coming back to kind of its long-term average as we speak. In the last few months, if you found the markets kind of crazy, that's because we've been in a relatively high volatility environment. So the question is now, with volatility cooling off and people settling back in, are we about to just enter into another ramp up, or are we just kind of hovering around the average for a little while? I personally lean towards the latter. I don't see a huge uncertainty event on the horizon, and I do think the path of least resistance is that we may have seen the worst of these trade wars behind us. That's optimistic thinking, but I do also think most likely that the market priced in the worst case scenario and has now kind of ruled that out as negotiations seem to be taking place. The market is also telling us that a deal of any sort that involves the United States, as we saw with the UK deal, is perceived as a positive thing for the US currency, which has been a big loser in all of this. The US dollar has taken a big hit off of all of the trade negotiations with all of the tariffs, because again, it makes the US, in terms of its centrality, if you will, to global trade, under threat. If people are going to put up their arms and say, we don't deal with that sort of thing, we're not going to trade with the United States, or we're going to, find alternatives, that weakens the US centralism, if you will. But what we are seeing now is deals are starting with like UK, and it is expected that India will probably follow. We'll see some deals start to occur. And eventually, if the trade negotiations with China go well, we could see the US dollar actually really rebound. Taking a look at our economic surprise meter, we can see that the US dollar has really rebounded from its really low scores. We saw mid 40s, now back up into the 50s. And we see some of the strongest scores coming in from the UK, New Zealand, Australia, and Switzerland. Now, what that score of 54% that we just showed you was based on is the economic data that we see in the US economic heat map. This is telling you currently that we're a very mixed reading in terms of inflation, jobs data, and economic growth. So when it comes to the US dollar, I'm actually kind of neutral at this time. If we get some key breakouts to the upside, I would actually potentially look for signs that momentum may be turning bullish, especially if this is accompanied with some good trade deals, and we'll have to see what inflation brings next week. Inflation has been on the decline. The question is, with an expectation next week of 2.4%, will we get a number that is below that, which would be helpful to the inflation story, signaling that we have seen prices start to normalize more, or a ramp up in inflation? CPI will come out early next week, and I will of course have coverage for you. Make sure to subscribe to the channel if you're new here so that you don't miss anything. And this is the final call for the Edge Finder sale event. If you like the data that I share and the tools that I use in each of my videos to analyze why I'm bullish, bearish, and looking for possible trade setups, the Edge Finder is the tool that I use, and our biggest discount of the year is coming to a close today. Today's the last opportunity to get 40% off the Edge Finder. And if you're a regular viewer of my channel, the first link in the description down below will connect you to where you can chat with my support team. My support team, if you ask them for it, will give you up to 45% off as an extra special discount for subscribers. This also gives you a chance to ask any questions you might have about the tool, how it functions, and more. So don't miss the opportunity to pick up a copy of the Edge Finder at the lowest price of the year before it goes back to its normal price this weekend. So of course, how would CPI impact the US dollar? Well, if it comes comes in higher than expected, or a hot inflation print, that could potentially break this dollar downtrend to the upside. We've been seeing some very strong, decisive price action lower here. We have some key resistance at current levels, as well as up here around 101.6. If you get a really strong inflation print, it is possible that we do start to see these higher lows that we've been trying to form here really solidify by putting in, a decisive breakout of some of this key levels of resistance. And when we scroll out, you can see why this level is so critical. It was the bottoming point that we saw in late September of last year. That was right before we had a major move higher. Looking at the euro dollar, which I do have a long position and admittedly think I'm going to go ahead and close this trade because of some of the recent developments economically speaking. So I'm probably going to close this one out for break even today. But when I look at the euro US dollar, what you'll see here is that we've had this support level get tested to the downside. Now price is responding. So price action wise, we kind of just look neutral, but overall the trend to the euro dollar still looks strong. But I'd be really cautious if we continue to see downside movement here. If we sort of break through this trend line to the upside that we've been seeing, that could be a red flag that these lower highs are signaling further downside here for the euro dollar. So like I said, I'm long, but cautiously watching for an opportunity to go ahead and just close my trade for either a small loss or break even, or even a small win. So just a rapid fire reason as to why the US dollar slightly looks a little bit stronger now. Well, services PMI numbers came in better than expected, which is a good forward-looking indicator of how the economy might perform going forward. We also saw further evidence of this with a better than expected manufacturing PMI data point. And the NFP report that we saw last Friday came in better than expected, with 177,000 jobs added compared to the forecasted 138,000. Unemployment rate in the United States remains low at 4.2% compared to a long-term average of 5.7%. This is still a healthy labor market in terms of simply the unemployment rate. However, the labor market is not perfect. We do see job openings continuing to trend lower, and wage growth in the United States is cooling a little bit. However, 3.8% in terms of wage growth is still higher than the CPI, which is of course showing that wages are outpacing inflation at an index level. If you're talking about the price of certain goods in the grocery store, it doesn't always feel like that. And interestingly, dollar CAD just popped up as a bullish setup on the edge finder. However, price action wise, I don't love this. We are seeing some support hold here, but I'd really prefer to see some higher lows and higher highs before deeming this as an uptrend. And today's video sponsor is Vantage. Vantage Markets allows traders outside of the United States to explore all sorts of different markets using their CFD brokerage platform. You can trade things like XAU USD, NASDAQ, silver, and even individual stocks through their CFD platform. They have low trading fees, and for a limited time, they're offering a generous welcome bonus to my subscribers if you use the link linked in the description down below. Please note this offer is only available for non-US traders as they do not accept them, but if you're looking to take advantage of some generous welcome bonuses out there, explore Vantage using the link below. Gold has been retracing recently. Do you think it will retouch all-time highs in the near future? So in my opinion, all-time highs are not that far away. All-time highs are a move of 5% in the upwards direction for gold. Do I think it is possible? Of course. Do I think it's probable? It is kind of just simply based on distance. It's not out of the question that we could go test those highs. Do I think at this time that we will see sustained momentum in the upward direction? At this time, no. I would actually give you, so here's a fair answer. You say, is it possible that we go test all-time highs? Personally, I would give it a 50% chance. 50% chance that we're here, 50% chance that we're here. I really have a pretty neutral reading on gold at this time. When we take a look at the edge finder, the US economic data has come in a little bit stronger here recently. We've been seeing signs of deals out of other countries. There's still a large amount of uncertainty. So there's kind of a bull and bear case for gold, and neutral reading on the edge finder just going to tell me that I really don't have a strong opinion in either direction. So to answer your question completely honestly, I would say it's a 50-50. I don't see a strong bias one direction or the other on gold. Not to say it can't go higher. I just don't think that there's a clear setup for me on gold according to my system and strategy. You may have a differing opinion. That's totally cool. That's what makes a market.
Seems not so long ago we spoke, which was, just yesterday, quite late yesterday, because we wanted to reflect on that tariff announcement from President Trump and Prime Minister Keir Starmer on UK-US tariffs. I wanted to ask you more about market reaction to that news yesterday. And also there's been further news in regards to China and what might be happening with their tariffs, which has come out of President Trump earlier today.
Yeah, Johnny, in terms of the reaction to yesterday, so if we take a quick look at just how prices settled out yesterday, there wasn't really a very wild move. If anybody was going to kind of make a first agreement with the U.S., it was likely to be one of our closest allies, the UK. And so we got that. It was a good kind of omen, I think, for both sides. We talked a little bit about that on the podcast, just how, hey, this puts things behind us in terms of, and that's a good thing for both sides to a degree, right? If you're in the UK and you've been waiting to make business decisions, this gives you some clarity. Same thing for the United States, especially if you do business specifically in the UK. You know, there's not this looming, well, if I make a decision and then something drastically changes, you know, there is some clarity there, and that it is actually a pretty meaningful amount of impact to an economy if it can kind of stop the grinding to a halt point and actually start just kind of chugging along and dealing with the new environment that we're in. So in some ways, I made the point yesterday in the podcast that I think it is perhaps envious for others to see that and say, hey, look, now the UK and the US, now they can at least move on. Like, even if it's not ideal for maybe the UK side of things, at least they had that first mover advantage and maybe they can move past it. So there's a little bit of that in response to it. And clearly, you take a look at the stock market yesterday, it was up a good bit yesterday for the US. I haven't looked at UK stocks. I'll just do that now as well to see the reaction there. Yeah, so I mean, a bit of a mixed reaction yesterday. Not too far down, not too far up, just sort of flat for the day. And I think that this was, again, as we've discussed, largely expected that we were going to get a deal pretty quickly, and we did. I mean, that was, Johnny, that was like 1 month after the April 2nd that we got a deal made between the US and the UK. And it's an ongoing thing. It's an agreement thing, and there's continuous negotiations and progress to be made on that front. But I think like we said yesterday, it's largely a good omen. Now, as you mentioned, the real drama comes this weekend with China, right? The U.S. and China are supposedly I can't remember who said it, but there was just a release of a news headline that just hit the wire that basically somebody said, I think it was Navarro, someone big said basically that there was likely to be some fireworks essentially this weekend, that things should get interesting, maybe for the positive, maybe for the negative. We'll have to see, but it should be a very interesting market weekend. I do wonder if people will potentially de-risk ahead of that event, and perhaps watching the way the market trades today will be interesting. If you get a lot of kind of buying into the close or strength into the close, perhaps that's showing market optimism about what could be taking place this weekend. And if you see some downside motion, some weakness in the dollar, the weakness in the U.S. stock market, perhaps that suggests a little bit of uncertainty. But a little wobbly going into that print. We're not seeing another huge up day in the market, at least at the time of recording this. But I do think, Johnny, that's really the big one. We knew, like I said, US, UK probably going to make a trade deal. India and US are probably going to make it. We know that some of those deals are coming. The big one, it's really, most people, most nations seem to be relatively able to come to some sort of negotiation, but it's really that number one and number two economy of the world. Are they going to shake hands on a deal? Because that has ripple effects to the rest of the world.
And it does seem, Nick, that President Trump's strategy, albeit perhaps some people have described as almost a crazy strategy that we've seen since that original tariffs announcement, is working and has worked, because you are getting these very important countries in the G7 coming to the table and compromising. And the United States is getting, a lot of what it might not have expected to have got a few months or years ago. And so you can't fault it, really, if that is the case. I mean, we only had UK so far. As you've said, China's expected soon. Talks are ongoing between the United States and Japan. Korea, and so on. So he has his many critics, but it does seem there is method in the madness.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.